The bear is back. Hello, Market Club members everywhere. Adam Hewison here, co-founder of Market Club, with your midday market update for Wednesday, the 30th of May. Well, it's good to be back. I'm beginning to get more and more into the markets here. Basically, I just returned from my trip to Australia and New Zealand, so it's good to be looking at these markets, and we've got some great opportunities. Don't let these markets fool you. We looked at these S&P yesterday, and it looked to me to be a market that was forming a negative pattern. And of course, today we've proven that to be true, but I think it still has a lot more to go on the downside. But first, let's a couple of things for you. Just one is we have personal one-on-one Market Club coaching. This may be the most important time of all to do this. You can call us with a free consultation, 877-219-1482. And just see if it's right for you. But I really think the next 6 months are going to be one of the most important in, I don't want to say financial history, that sounds too dramatic, but I think it's going to be very, very important. And there's an opportunity to make a lot of money, but more importantly, you can lose a lot of money. And I think our one-on-one coaching will help you keep you on the right track. So give us a call, 877-219-1482. But let's go back to the markets. And as you can see, this is the S&P 500. This is a 6-month chart, candlestick chart. Now, as we normally do, we can put on some studies here. One is our Donchian trade channels. You can see that, and also our parabolics. And you can see the parabolics just sort of hit yesterday. But the longer-term pattern is going to be looking at the weekly charts, in my opinion. And the weekly charts still look negative to me. You had this little blip up early in the week. We've come back down. And even though it's oversold, we can stay oversold just like we stayed overbought for quite some time. So we're looking for this market to go down to some other levels quite lower than where we are right now. Let's just take a look back at the daily and look at the pattern we see. We drew this yesterday, and I'll draw it again today because I think it's insignificant. So here we are. We had the move down, and we have this type of pattern. This type of pattern is a what they call a flag pattern. And it usually goes down the corresponding amount. So from, let's say, 1,300 up to, let's say, 1,400. We'll just round it up. Very simple numbers. So 13, 14, it's 100 points. We should get down to this level here, which is so that's our target zone, is going to be 1,200 on the S&P 500. So still a significant amount to go, 13, 14. Our monthly trade triangle is negative. Our weekly trade triangle is negative. And we were looking for a high in this market towards the end of May, which is right around here, beginning of June. So I think we've seen the highs. I think we're going to see this market go lower. Plus, we pointed out that long-term trend line in the market. So let's just clear the screen and go to my next market, and that's the Dow. And the Dow pretty much is the same way. We're not going to focus on any particular stocks today. We're just going to look at the various indexes because they're very important. And this is the Dow daily chart. You can see it's negative. It's coming down from an overbought condition. And you see it didn't take much to get it overbought, but it's going to be coming down. Same pattern there. You're looking for the move down. It just reflects, as I say, this type of pattern. And that's not a positive pattern. That is indicating you should see the Dow. Let's say we're looking at this at the 12,400 level from the 13.2, so that's 800 points. We should be looking at 11.6, somewhere around this level here is a target zone, 11.6, so that's 11,600, at least initially on the downside for the Dow. So let's clear the screen again, and let's get back to see what we're doing here on the market. So let's just clear that off and go to our next market. And the next market is going to be the NASDAQ. Actually, it's silver. So silver, looking at silver, you can see what's happening here. I'm going to get this a little closer in to give you an idea, which is very interesting to me, is the trend, and I'll put our monthly trade trials on, but the trend basically still down. From this level, 29, almost $30 an ounce. It's currently trading 27.96, around 28. So nice move down. But what we're seeing right now in this market is this pattern here. This is 7 days, 7 days, 7 days. So if this pattern continues, we should see maybe 1, 2, 3, 4, 1, 2, maybe the next few more days up. But I think the level around 29 is going to really be a barrier. So this is going to be resistance. in the silver market, in my opinion. So let's clear the screen, go to our next market, which is gold. And the gold market is really doing the same pattern, 7 days, 7 days, 7 days. I think resistance 1600, big resistance level. I don't think we'll get through that. Now, a lot of people are saying, why is gold not going up with all the problems in the euro and Europe and everywhere else? Well, it's just not there yet. I think it will be, but I just don't think it's there yet. So I want to see some of our tools, like our trade triangle, start getting green. When they do that, there'll be plenty of time because it'll be a prolonged move. So let's go to our next market, and copper's the next market, and copper made a new low today. Not a good sign. It's reflecting the economy around the world, slowing down in China. Europe is obviously in a recession. The U.S. is, it's impossible for the U.S. to go it alone, and I think that's the big element here. It's impossible for us just to be unscathed by the problems in Europe and also in China and Asia. So let's look at our next market, and that's going to be, what's interesting, if you just go back to our portfolio, you can see basically all of them are green except for the last two, and we'll be talking about those in just a moment. So let's take a look at the crude oil, which broke through the $90 a barrel level. Remember yesterday we said the trend was clearly down. Psychologically, the 90 level was acting as support, short-term support. Boom, that gave way. You don't bet against the major trends because that's too expensive to do. Now, what I want to show you with crude oil is this, and let me just max this out a little bit. And I want to go to a just a simple line chart, and I want to take everything off the screen. So, boom, boom. And this is what I'm looking at in crude oil. If you look at the lows in crude oil, here's a major low right here, a major low right here, a major low right here. I think there's a low coming in quite a bit in the future, not right now. And I think we could see this market seriously trade towards 80. It's 87.91 right now on the July contract. I think it's a 10% move. And in futures or in a leveraged ETF, that's a big, big move. So I think any rallies in this market are going to be met with selling, as I think the economies are slowing down around the world and things are not as rosy as everybody is predicting. So let's clear the screen, go to our next market. And the next market we're going to be looking at is going to be the euro. Same thing with the euro. We are looking at the 120 level, which is the area we touched right here. So that would have to be a target zone. Longer term, can it go lower? Yes, it can. Now let's look at a couple of things here. So if we look at the euro, here's a low, the 120. That's going to be the next target in terms of the dollar-euro relationship. If you remember, we talked about the line in the sand at 130. Well, clearly we've gone through that, the 130 level, up to the 150. That's 20. That gives you a 110 level. And at that point in time, people will be probably thinking it can go to parity, which I would not be surprised to see it actually go to a discount to the dollar, because I think people will be streaming into dollars. So basically, people are going into the USD and they're going out of the euro. So they're both bad, but the euro happens to be a lot worse than the US right now. So let's count that as the next target zone, 120. And there are some markets you can trade to capture these moves. So let's go to clear the screen, go to our next market. And the next market we're looking at is going to be something, a very important market in my opinion. It's the CRB index. Now the CRB index, I'm going to just draw this very quickly on the screen because there's some things happening in this market that I think are very important. One, you've got negative, 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 minus 100, strong downward trend, no question about that. Also, if you remember, we broke this trend line. We talked about that yesterday briefly. Now the next level of support, in my opinion, is going to be the 250 area. And I think that's going to be the target zone. Now, if we go, if things continue to be negative, we could very easily get down to this 220 area on the downside. And if that continues, we'd be looking at 200 and then 180. So, but certainly the 250 is our near-term target zone, and I think everything is still primed for that to happen. And let's see what happens in the future. So I think any rallies in these markets are going to be met with strong selling. People want to be, it's very few people have really seen a true bear market. A bear market is just really not a pretty sight. It just doesn't let you get out, and that's the problem I think a lot of people have right now in these markets, is they're just getting in the markets and they're not being able to get out. Now the next market we're looking at is the SDS, Pro Shares Ultra Short S&P 500. Has lots of liquidity. It's plus 85, which means it does exactly the reverse. So it's up 2.71%, and you can see the S&P is down 1.42. So it's just pretty much on the money percentage-wise. We've got a long-term chart here, so let's just get that in a little bit closer, 3 months, and let's just you can see basically this, I would say this low here is going to be the low of the move, and we'll start to see this market close higher. Certainly a close or a move today, I think over the 1714 level, I would construe as very positive. But I think for the moment, you've had this, the type of pattern we're seeing is initially we had the move up, we've had the pullback, and now we're going to go to another leg up, which is going to take this market, which will reflect the move we want to see, we're expecting to see, I should say, in the S&P 500. So the trend clearly is up in this, so you can trade this in an IRA or a 401k without a problem. It is leveraged, and it also, but you are buying and going long this market, which is the inverse to the stock market going down. So it gives you some protection if you have a portfolio. So let's clear the screen off again, and let's go to our next market. And the next market we're looking at, let me get my tool there, is the ultra short euro. And you can see it's moved up to new high ground. It's not as actively traded as I would like. Certainly it's a couple of million shares, so it's not too bad, but certainly it's the way to go as the euro. We still expect the euro to move lower. So if we scope this out a little bit, maximum, there's the max. So, and we take the Fibonacci off here. We don't need that right now. So you can see this market is really doing something I think technically I like. It's had this big sort of energy base. So we call these an energy base. So that's capable, I think, of carrying this market higher. And certainly you could also call this a head and shoulders bottom. And if we, let me just scroll, we've broken out today, and that would indicate we're going to go, this is 17 on the low. We broke out around the 20, let's call it the 2050 area. So it's $3.50 on 2050 is, what's that, 24. So I think the target zone would be at least initially 24, and that sort of coincides a little bit with this area of resistance right here. So that's something I definitely want to take a look at, and play in the symbol we want looking at is EUO, which is short the euro, and I think that's a pretty good way to look at the market. But really, if you have time, give us a call for our personal one-on-one Market Club coaching. Find out if it's right for you. The call is free and the consultation is free. You couldn't ask for more than that. And give us a call, 877-219-1482. I'm Adam Hewison. I'll be back tomorrow. Thank you so much for your business and also looking at our products.